Good evening, everybody. Yes, it's video time again. You're getting them a day early. As you know, I'm off on holiday tomorrow. I should still be doing the reports, obviously, but I wanted you to look at this Eurodollar chart. I think it is incredibly important as to seeing the direction of the euro. Now, as you can see, pre 2008, we were going up, and you know you've got to understand from where the euros come from. We've come from such low levels. The low on the euro is like 82.27. Now that's quite significant, I think, and this was after we went into Europe. The euro really didn't have a great time of it, and then it did, and then we rallied all the way to 2008. Now, we all know what went on in 2008, so there really is no point in going over it, right? But what I wanted you to see was the fact when people tell me the euro can't go any lower, I go, well, could be. So I've learned over the years to never say never. One of the other things I've learned over the years is how spooky these Fibonacci levels are on a longer term time frame. Now, when everybody was leaping up and down, and there was a lot of leapers up and down in, okay, that we were going here to parity, and we didn't. We made that little base pattern, as you can see. You can call it a descending wedge, you can call it on the weekly a double, but it doesn't matter what you call it. It's just that when that made that month there, back in 2016, and the next month we traded higher, we were on a one-way ticket. Now, as I've said all along, with strong trending markets, they retrace 38.2. And that should be it, 38.2. Now, if you look at what the euro did, we know it traded to 125.25. But look where the 38.2 fib is. It's at 125.14. Now, anybody that's got a charting package system, put your own fibs on. I'm not curve fitting. That's the high, that's the low, that's the 38.2. It's there for you all to see. Now, because it's so there for us all to see, sometimes we miss something, because you get people that aren't trading the way we do. They're trading in and out on a day-to-day basis. They're not sitting back and looking at the bigger picture. Now, if you look at where the euro actually broke up from on the monthly, okay, you can see quite clearly it was this little lot here. And there we are. So let's take a look at this on a weekly view. Now, here we have the weekly chart. You can see there's the start of this upward move, okay, just say for the last 2 years. So there we are, we come down to 103. You can see where that base was there, okay, so we come down to 103 and we bounce up. You see, even on a weekly chart, you still can't see that up there was the 38.2. You can't see it because it's not available to you. You're not watching for it. But I do. I look at these every month. At the end of the month, I go through the monthly charts with you. Now, you know how much I'm a pivot point person, and the monthly pivot point going into November is 114.13. Okay. Now, already Friday, Thursday, we broke that level, but keep it in your head. Okay, 114.13 to the resistance, which is at 114.25. Now, we do have this topping pattern here, but it's not just a topping pattern. If you look at the monthly chart, it's a topping pattern within the overall downtrend that accelerated in 2014. So you can still see this on the monthly chart there. This is what we're looking at, this little bit here. Now, back to the weekly. So that whole pattern there was that little bit that we saw when we went up and sniffed at the 38.2 monthly fib. So this is not only a topping pattern on a weekly chart, it's a head and shoulder pattern within a continuation of the major trend. The major trend is down, primarily down. The primary trend is not up in the euro. So you have to be very, very careful if you want to go long. Now, obviously, when we dipped our little fingers in it and we bought 113.13s, unlucky for some, I know, but luckily for us, not so much, that was because of we had a Fibonacci number there. We had a weekly pivot there, but we had this 200-week moving average. Now, these are lovely little bunnies, okay, and they hold. So whether they hold forever is debatable, but at the moment it's holding. So although I do think if I take the measurement of that and I look at the monthly charts, in my mind there is no question that we trade lower. The problem is people don't look at the longer term charts. I do. Now, our daily pivot point is coming in at 114.04, our weekly at 13.81. So these are the areas that we're going to be watching going into next week. I won't do a daily video for you. I think this really confirms everything that we thought. So actually I will have a look at the daily. So there was your bottom. Well, there was your second bottom. Markets are oversold. Trend is still lower. RSI flat. Okay, but unless it breaks here and closes below here, it will gravitate up higher for the rest of the year. When I say gravitate, it'll do a euro-dollar move, which is exactly what this thing does. Okay, it makes its move, it goes sideways, it makes its move. So we know it's 1300, the world knows it's 1300. So, you know, but bear in mind that all your pivots are coming in above that. You've got, as I said, the daily at 14.04, the weekly at 13.81, and the monthly at 14.14. So just bear that in mind, okay, and trade accordingly. We can go back up to the 50% level here. We can even go up to the 61.8, but that will not detract from the overall bearishness of this chart. Okay, I'll catch you when I've landed in Hayden Island. Have a great weekend.